Hello and welcome to week 7 of our series, Building Strong, Prosperous Financial Future. Today we're going to talk about or start a series on life insurance. It's not an easy topic. A lot of people do not want to hear it. And I'll ask them, don't you have an auto insurance? They will say yes. And I know that before you got the key to that house that you live in, the closing agent ensure that you have an home insurance. So what is the big deal about life insurance? Okay, I want you to get a pen and paper, and if possible, call your spouse. Both of you sit down together. I want you to draw a line in the middle of that paper. On the left-hand side, I want you to write down family financial obligations. On the right-hand side, write family assets. Go back to the left-hand side. Let's start with the family financial obligation. Number 1, mortgage. Write down how much you owe on your mortgage right now and how many years you have to finish. So I'm using a family of 4 here as an example. So they have $250,000 on their mortgage and they have 20 years left to finish. So write your own. The next one, how many children have you? Multiply that by 100,000. So in this case, this family has 2 children, age 4 and 8. And so they are going to write down 200,000 because you are obliged to pay for your children's university education. So 200,000 for this family, write your own. And then all your loans, student loan, credit card loans, every other loan, like car loan, everything, write it down, put it. In the case of this family, they have 100,000 loan. So their total family financial obligation is 550,000. Now, so I believe you've calculated your own. Let's move to the right-hand side and say family assets. That will be your RRSP, Registered Retirement Savings Plan. So how much do you have there? Write it down. Your TFSA, tax-free savings account, how much do you have there? Write it down. Your children RESP, Registered Education Savings Plan, how much is there? Write it down. If you have a rental property, what is the net value? That is, if you have to sell it, what will be the net value? Write it down. If you have life insurance, how much is the death benefit? Write it down. And if you know of other assets, write it down and calculate the total. In the case of this family, they only have 50,000 in family assets. Now, compare how much is your family asset minus your family financial obligation. In the case of this family, they have a net of 500,000. So if in your case, your family asset is way more than your family financial obligation, I say congratulations, you have nothing to worry about. But just make sure that those assets are the type that will transfer easily to the surviving spouse or to your beneficiary if something should happen, without them going through the probate court. That's all you need. But this family that I'm using as an example, which is example of most families, this family has 500,000 net family obligation. God forbid, but if something should happen to one of them and the person passes away, the surviving person will be holding the bag for $500,000. That's a lot of financial anguish. Meanwhile, this family, if they take a 20-year forced to go away term life insurance, it will only cost them $48 a month. I hope I'm making sense. That is way less than what they pay for their car insurance, one of their car insurance. So I hope I'm making sense that this is real. You have to protect your family. Now, next week, I'm going to continue this series. I'm going to elaborate more on the other type of life insurance, why you need them. So my name remains Adekunle Ajishebutu, CPA, CMA. If you like what I'm doing, share, like, and then, ask me questions, comment. I will see you next week. Thank you.